your host, Chris Vecchio. He's Tony Batista, is what my notes say here. How are you, my friend?
I'm doing well. I'm doing well. Thank you for allowing me to join you on this Sunday and kind of a well, I don't want to start this on a bad note, but a little bit of a sad Sunday. So happy Hanukkah to everybody out there starting the Hanukkah season. We had some turmoil around the world. I will see what it does to markets. I hate talking about markets when you've got crap going on in the world like we've had lately with all these shootings. So um, kind of that kind of day. Anyway, let's talk about markets.
Yeah, some somber news over the weekend in many corners up here in Providence, Rhode Island as well. So,
Yes, Brown.
just
Yeah, right. Unbelievable. I mean, I don't know when, as human beings, we're going to start acting like human beings. I just hope it's sooner rather than later.
Tony, we have some things to cover in these markets as the world continues to spin. We had a close of 68.93 on Friday for the S&P 500. Volatility had a little bit of a trek higher during the session, but not by all that much. We still close at 15.
I'm glad you say. I'm sorry to interrupt you. I'm glad you say that. Not as much. I agree with you there. Not as much as you would have thought. We had a nice little flush out in a lot of stocks that have brought us, even like those fringe stocks, like not really fringe stocks, but like the VRTs of the world that nobody ever talks about. A lot of these other AI stocks that nobody talks about. They really got hammered with the even the S&Ps down 70 and change. Volatility didn't creep up as much. It's a little bit worried for the bears when volatility doesn't creep like it should. You didn't have that 10% move, and from such a small low number, 10% is easy. You know, at 20, 10% is a little bit harder. I mean, at 17, 18, it's a little bit easier. And we only got up around 3.5, 4%. It wasn't that big of a jump in vol. Sorry.
No, I think that's why I start the show here, because if you look across the volatility futures curve, you don't even see this expanding that significantly. We have the January contract here on the screen, 1862, barely higher than where we opened up on a few hours earlier.
Yeah.
So, Tony, like if this was a big, significant sell-off ahead of OPEX week, you probably would have felt a little bit more. And instead, it's a market that may just be a little bit long in the tooth right now. We showed the AAII investor sentiment survey recently. It's sitting in the top 2 bullish readings for the entire year right now. So everyone who wants to be long is pretty much long. They need a new kick to get there, particularly after we had those really disappointing Oracle and Broadcom results last week. So I suppose that's a decent place to start if we talk about single equities here before we go big picture a little bit later on with Ilya.
Sure.
Broadcom's been a little bit more.
I'd rather go AVGO though than Oracle. Like Oracle's been a stock
Sure.
that's just been, it's been hammered. It's been taken out to the woodshed. I mean, I actually have a little bit of long delta in Oracle post earnings in there, which seems to be working out okay. But AVGO, on the other hand, that's been one that's been, a leader in the clubhouse. And listen, you're more of a technician than I am, but from all the pundits that read everything that everybody said, they beat and they got punished. This is what we talk about sometimes about how, these stocks, are set up to fail. Like, the upside on for earnings when a stock's gone from, from 100 and change to 400 in a year or so, the upside's a little bit muted. You know what I mean? If it's a $40 range, it's probably 10 to the upside, 30 to the downside. But man, this stock really got hammered. Down 40.
It really did. Yeah, down 11.4% on Friday. Yeah, apparently their backlog isn't as big as the street assumed, Tony. No. You're supposed to have even more back orders than you actually said you did.
That's
okay.
Okay. Well, I mean,
high bar, very high bar.
Yeah, high bar.
Oracle's dog 189.97. It has, almost 3 times the volatility profile there. IV rank of near 47 versus a 17 for Broadcom. Are you not a catch a falling knife kind of guy?
No. I have long delta in Oracle, and I like the IV rank in Oracle too. So I
Sure.
agree with you there. I think Oracle's a better play than AVGO. I just didn't like the way AVGO behaved for the market. Never had a bounce, and we just got the number. The market just opened here. I mean, the S&P's opened around 2 in the orders or so. Really, basically an unchanged market here. All 4 indices are up, but ever so slightly, and volatility is basically unchanged. Bonds are up too. I mean, really, I think the biggest mover in the market here, I'm going to throw out nat gas because I don't know too many people that really trade that, is the cryptocurrencies. Bitcoin down to 1,800 or so, almost a 2% move.
Yeah, we're getting a nice little bump here in stocks, and if folks are noticing here, when you come on the other side of the weekend, all the contracts have rolled over. So you're looking at the March expiry for 2026 now, for the S&P, for the Nasdaq, for the currencies, for the bonds, what have you. If you are trading futures or the micros, Tony, it's a soft start to what's an important week in our corner of the world, right? It may not be so earnings focused, but we do have a CPI report. Inflation's on deck. We're going to have non-farm payrolls. Do you think those things matter? I know that you're not the top priority for someone who trades like you do, but you do have them on your radar, right? And what are you thinking about these reports on the other side of the Fed meeting now?
I mean, I think they become a little bit more interesting because we had the government shut down and we didn't get the all the proper numbers at the proper time. I believe this is the first time we're going to have two months of data. Is that
Kind of. For the jobs report, we're going to have like a month and a half. They couldn't conduct half the survey, so we won't have an unemployment rate, but we will have an NFP figure. And then the second report, we'll have both sets. So we'll have an unemployment rate and an NFP figure.
I think it's going to all be like it always is, how the market kind of reacts to it, and I don't think anybody really can tell one way or the other. We could make educated guesses on it. If you're going to go to your first point that you started out the show with, the volatility staying relatively low here, I would say that all of it is a non-event, and we'll just chop around. Doesn't mean we have to go higher, but I just think we'll chop around. Doesn't mean we're going to go lower either. So I think that's probably, I know we talk about market, markets are down 70 handles. Markets up 70 handles. We nobody complains or says, oh my God, it's a humongous blow off top, which we had just the day before. We're down 70 handles, and a lot of stocks did get taken out to the woodshed. Have been high flyers. But everybody starts to panic. I don't really see the panic, although I was a little bit surprised that we opened higher. I would have really liked to see us open lower, maybe even by 20 or 30 handles, and then maybe we can catch ourselves a little bit of a bid. I'd like to see an overnight weakness in the market as a kind of contrary indicator on what the end of the day will be like the following day. And right now you're seeing basically an unchanged market, not giving me any indication. Volatility basically unchanged too.
Well, we did have a little bit of a softer open to the upside here for stocks, but you noted crypto here at the start of the show too. Bitcoin now down 2% in the futures market. It has not been joining the party. And the other day when everything else was rallying, when the stock market was feeling good after we had our initial Fed meeting, we had our Broadcom earning results following the earnings result themselves, not the press conference that drove the stock price lower. Crypto was not buying in, and it hasn't been validating, at least as like a risk indicator right now, that stocks necessarily in the clear. Volatility rank has perked up though, 56 IVR. So you can't dismiss it. How are you playing the crypto world? Because it does seem like it's giving you a better opportunity right now than whatever we're seeing in equities.
Yeah, I have to be completely frank with you. I haven't been as active and two-sided as I have been. My son's been buying dips in IBIT, not really selling it too much, selling a little bit of volatility in there too. It seems to be chopping around, not having the effect on the market that it had on the way up, and not having the effect on the market on the way down, right? If I told you, Bitcoin was going to be down 2.5%, or Ethereum is going to be down 2.5%, a couple of months ago, you'd have said the E-mini S&Ps are going to be down, double digits. They're not going to be unchanged on the day. So sure. It's kind of a choppy market. I mean, gold has been acting good. I mean, I know it sold off a little bit off of its highs from yesterday, from Friday. I don't think it was ever red on the day. If it was only by a skosh. Silver had the big move from its what did it get up to, about 64 or 5 or something? 65.
65 9 cents. Yeah.
Yeah.
It promptly sold off $3.
Yeah. The gold silver ratio came back. Gold was up, silver was down. It moved by about 4%, the two of them. But you got silver up small this morning, tonight, and you got gold up small. It looks like a lot of complacency. I don't know. I don't see the urgency one way or the other. We just made new highs in 3 of the 4 indices, right? Everything except the E-mini S&Ps, I believe.
Yeah, depending what product you're looking at. I mean, we called this out the other day. If you're a regular retail trader, you're probably not trading S&P 500 futures. But if you're a mom and pop who just has a pension fund or maybe just 401k, you go home and you see SPY. SPY closed at an all-time high on Thursday,
Right.
right? And like that's the one that matters most for the average person out there who's invested in the market.
Right. And now we're off 1.5% from the highs. I mean, I don't know. I mean, I think you got to feel good about 2025. It's been a good year.
Yeah, precluding Santa Claus doesn't put coal in our stockings over the next 2 weeks. But there's really not much left. I mean, Tony, I'm looking at the earnings calendar here. I don't really see much of anything to pay that much attention to. Is there something that you do as a more experienced trader, right? Do you approach the end of the year differently than you would say, mid-September or March?
Sure, I say, how the hell did we get here? That's what I say. I mean, I can't believe that we're here. Like, I can't believe it's December. I can't believe I'm going to have a granddaughter tomorrow. So I have a granddaughter coming tomorrow. I can't believe a lot of things, Chris. But you know what? You just keep moving forward. Is what you do, one day at a time. Almost like like somebody in the program. You got to do one day at a time. I don't look at it as like the end of a year because January 19th for me is no different than December 19th. There's no tax harvesting or anything like that. I trade options. I don't really trade that much stock.
Sure.
So for me, it's just another. Every day is the same. It's like Groundhog Day, man. Every day, I underperform. I always want to overperform, and every day, when I do well, I think I should have done a lot better. And when I do horrible, I say, I saved myself a couple of dollars here, but I really stink. So it's the same thing.
Yeah, so Disney apparently made a Christmas movie called Christmas Again. It's a kids movie that's kind of based on Groundhog's Day. Wouldn't wish it on my worst.
The Grinch is out again, or something like that. I mean,
Tony, don't watch. I would not wish this on anyone. You can't. I don't know how they call that a movie. So
every kid is going to want to see it, so it's going to make some money. That's why they keep remaking them.
What we do for our children around the holidays.
No doubt.
Okay, so stocks, they have this move lower on Friday. It comes after Oracle the prior week, Broadcom this week. People are a little bit disappointed in the AI trade. Some of these names like Meta maybe that's not a right print, but it looks like it has a big reversal. Microsoft really couldn't get going. It's been struggling over the past few weeks here. This time of year, are there any things that are on sale during the holidays that you want to get your hands on, even though maybe the charts don't look great, but volatility is quite low?
I like to stay where I've lived all year long. Nvidia is obviously not a for sale stock at $175, but it's certainly a lot lower than it's been. I mean, if you would have asked for, I know back in April it was, it was flirting with 100. But if you want to go back to October, it was flirting with 200. So I like to stay where we've made our bones. I like to stay in the Nvidias of the world. I like to stay in the Teslas of the world. I like to stay in our top stocks. Like I would rather be a seller of a Tesla and a buyer of Nvidia here, just on price. Nothing else. I am long a little bit of Delta and Oracle. I mean, I've got positions all over the place here. I can quote some of them for you. I've got some short premium in AMD. Amazon's been a decent stock to trade. It's in the middle of a lot of the stocks that we trade are in the middle of their range with relatively low implied volatility. That's if you want to ask me what's the problem with what's
Sure.
2025 December what's the issue? The issue is every stock I like to trade has low implied volatility and it's basically in the middle of its most recent range. By most recent range, I just mean the last 45 days. And some of the Mag 7s are on the low end of their range. So maybe the Mag 7s are the ones that are on, a little on for sale here if you're a bull. And if you're a bear, it looks like the whole market could be sold.
It's interesting you say that because what we have seen in recent weeks is the equal weighted indexes have really outperformed the headline ones. So I would go over to RSP and QQEW to point to that. Obviously, tech stocks were down on Friday, so QQEW loses a little bit less than the triple Qs. But Tony, I don't want to say the crap's been flying, but certainly I've heard people here say, well, the Russell's not going to lead a rally with the small craps. So sticking with that notion that this is really an unloved index, it has been a leader recently.
Yeah.
Do you like the Russell more
No.
than the other guys, or
No.
is this no pigs
I'm
fly sometimes?
I'm one of those if it walks like a duck, quacks like a duck, it's probably a duck. I don't like when the Russell's a leader. Now we've had two-sided action though. Russell and the Dow have been leaders one day, and then even the S&Ps and the Nasdaq, take it over the following day, and then it goes back and forth, and that's the kind of chop we've had, and I think that's the easiest thing to call for the market here going into the end of the year is a chop like this. I think you're going to think you missed the top multiple times. I think you're going to think you missed the bottom, or the sell-off wasn't big enough multiple times, and we're really going to go nowhere. That's what I think. I mean, when you look at SPX, that 6850, and I know we're lower than that right now, but when you look at it, I mean, that seems to be where we keep chopping around on any side of that in a pretty tight, but listen, when something's $6,800, it's a tight but vicious range, because 50, 100 points, it's a lot when you're trading. It's not a lot when you say something went from 6,800 to 6,900, from 6,800 to 6,700. But when you're trading options, 100 points in SPX, it's a big move.
I think about that in silver a lot recently, where it's like, oh, silver moved $3 today. Well, that's no longer a 10% move. That's a 5% move.
Right.
So it's not as it's
silver's been the one that's been giving my son fits. At 62 here, it's a lot better. And his position is a lot smaller. He's been scalping around it, but he got a little, futures you can get a little too, you can get rambunctious with them, and it gets big. Nobody, you just mentioned it was down $3. You can also say it was up $7 the previous, 5 days or whatever. So, it went from 68 to 65, basically. I mean, and if you were short it, when did you cover it? You didn't cover it when it went down 50 cents on the day. You know what I mean? You figured you waited it out, you sold the top, and then it would go $2.50 higher than that. I mean, the only reason why silver sold off was because Dr. Jim Schultz tweeted out that silver's going to 70, and then that was the high print, which we all knew. We needed something.
That's why. Okay.
Don't jump on the bandwagon. Let me keep the bullseye on my back.
No, I was trying to figure out why, because I'm still trading on the long side. These calls are deep in the money now. I want to start rolling over and going out to 72 days. I'd like vol to come in a little bit on one of these sell-offs.
Mm-hmm.
And I do, Tony. I want to go out and buy like the 67, 69 call spread here. It's a big trade. It's a big contract, but I've just been rolling forward all of the gains that I've been trading long silver into these just slightly out of the money, about 30 to 40% probability of profit call spreads in these breakouts, and it's worked for me and how I've been operating. Listen, not for everyone, but it's been working for me. So I'm looking forward to just buying more silver here.
That's what I love about the markets. Everybody can have an opinion. Nobody gets hurt for having an opinion. Matter of fact, you usually get praised for having an opinion, because that means you're usually a leader. So it's good to have an opinion. And everybody has a different style on how they benefit from that opinion. And there's no wrong or right way, or better or worse way, as long as you get the direction correct. That's all. It always comes down to one thing: as long as you get the direction correct, that's all that counts.
Ilya got the direction correct last week when he was offering some suspicion about the market's inability to rally, and I suppose it's a good time to bring him on.
Let's bring him in. Sure.
That's called the transition, Tony. Ilya, welcome to the Thunderdome.
Gentlemen, how goes it?
We're well, Ilya. How are you?
Good. Just looking at these markets and thinking, man, I was very close to not having called it correctly, and then Friday happened. By a whisker, man.
What a difference a day makes, right?
What a difference a day makes. I was sitting there all week going, I don't know. And then Friday finally comes around and go, well, it took them 41 hours to figure this out, but okay.
It took them 41 hours to figure out what you already knew.
What I suspected I could possibly have known and exposed myself to. So I was looking at my P&L and going, well, they're either going to prove me right or wrong here. We want
to look at you. So turn your camera on.
My camera is on.
Is it?
Let's try again. How
there
about
you
now?
go. There you go. We want to look at you. There you go. There's that.
There it is.
Face.
Ilya,
The production team has had me adjusting my setup here, so I don't know what the hell I've done here today, but at least
Whatever
it seems
they
to be
did, they
working
really
now.
made you look good. I don't know what happened to Chris, but they really made you look good.
yeah, no, Chris shaved, and I need like a day or two to get back to looking like a human being. Yeah, so Ilya, this is obviously an important week for people like you and me, macro data wise. Gold still looks pretty decent as far as I'm concerned. Silver had a little bit of a pullback the other day, but net still up on the week, right? I really like how gold's kind of just breaking out and continuing higher.
Yeah.
This has been one of the big thematic trades though of 2025. Do you think that we should be looking for what worked this year in the markets and expect those same things to work next year? Like, for example, being directionally neutral in crude oil has been awesome. Should traders still work with what's been working here? Or are there new themes that will be emerging as the calendar flips?
Well, I think the price action is going to tell you, and that's the most important thing. I mean, when people come out there and they go, the thing that's going to happen next year is going to be blah, blah, blah. I'm always skeptical and I'm always interested in what the price action is going to tell me is going to happen next year, because I forget who said this, but the best laid battle plans disappear upon first contact with the enemy. So I'm not looking to over engineer anything here. It's been a year of obviously wild reversals. At one point in the first quarter of 2025, we fully erased all the gains from 2024 and then came all the way back. So it's been interesting and emotional. And over engineering, I think, is probably not the best idea. It's probably better to be open-minded and nimble, because it could be a very different year next year. I mean, just look at how shaky the markets were on Friday. You guys were just talking about Broadcom and Oracle. I mean, what are we actually worried about here? I mean, yeah, okay, Oracle's numbers were not the best. Fine, they missed a little. The Broadcom numbers were not only good, but the market saw them as good when they came out. Chris, you and I were on overtime when those numbers came out.
I saw them print 424.
Yeah.
They printed 424.
And Broadcom rallied. So in my mind, this has nothing to do with Broadcom or not necessarily Oracle. They didn't care about the Q3 earnings reports from the Mag 7s in general. They didn't care that the overall earnings season in the third quarter was excellent. 13% earnings growth overall for the S&P, 27% for tech. And in my mind, they don't care because they're afraid they're not going to get the cheap money padding from the Fed to the extent that they want it next year. Now, what are they afraid of? Who knows? But for some reason, they're really concerned with 25 basis points more or less. And they spent 41 hours, almost a full 2 days of the international order from US to Europe to back to the US, trying to digest what the Fed did, and ultimately said, yeah, not enough. And the defenses were down.
Tell me about the bonds then. So bonds under 150. Under 115, they've been kind of weak, as you could see by all the red bars here. Nick and I have actually been trading it from the long side a little bit. We're able to get out on Thursday, right near the opening, over 116.12 or so. I think I'm doing it from memory. You can check the follow page if you want to see there. Haven't reloaded, but what do you think about bonds? I have a feeling you're bearish on bonds, but what do you think?
So I was looking at the long side also, because my thought process was the Fed is going to under promise in the short term. And what the markets are going to say is, okay, we still need the cuts though. So they're just going to happen later down curve. And so what would happen would be the curve would shift where you'd see rates go up at the front end, but go down at the long end. But the Fed kind of threw a wrench out there with these asset purchases that they announced, these $40 billion a month in short-term paper. Now, Powell went out there beating his chest, screaming, this is not stimulus. No, don't take it this way. And the markets went, is that quantitative easing that we smell out here? What is this? And the price at the front end actually went the other way. So right after the Fed, the front end yields came in quite a bit. And so now you sort of look at this and go, well, did the bonds really break down, or did we get some sort of a rotation at the long end? I was looking at the long side also, but I got shaken out, obviously, with that breakdown at the end of the week. It ended up being small. I ended up walking away with just a little nick. And so at this point, I'm standing aside. I kind of want this to digest a little. The price action would tell you sell, but I don't love that idea.
Volatility is extremely low too in the bonds.
Extremely low. Yeah. So if you wanted to get yourself into a little TLT call vertical, it cost you almost nothing.
Yeah.
Well, I'm not even being directional about it, Tony. I'm doing a reverse iron fly here in notes because it's a flat IVR, right? I just need this thing to move. I don't really care where it moves as long as it moves. And because vol is so low, it's pretty cheap to execute a position on I'm going beyond the typical 45 cycle. I went out to 68 days here. And so just to replicate this, reverse iron fly is where you're long the at the money call and put, and then you're short the out of the money call and put. So I'm going 2 points wide for my strike at 112 down to 110 up to 114. It's a little bit better than a 2-to-1 risk to reward, Tony, risking 1,200 to make 718 on a 64% pop. And there's enough time for notes to move. Maybe it's not going to happen in December, but with that low volatility, it's easy to pay for a position that has that duration on the board that could see this work at some point in the next, say, 2 or 3 months.
I can see it as a time play. It's not, it's not, again, going back to what we said before Ilya came on here, I agree with everything that you said. Volatility is low. I agree that nobody knows which way it's going one way or the other. I don't hate the strategy. It's a slower moving type strategy. But I mean, everything fits. So sure. And if the time to do it is when volatility is low, this is the time to do it. Doesn't mean volatility can't stay low for 2 months, but this is the time to do it.
No, right, exactly. Like mechanically, you sometimes, what do you do in low IV or high IV?
Great. It's the same thing like selling high premium, and premium goes higher. You sell a 40 IVR and it goes to 80. I mean,
sometimes it happens.
You don't know, right? Exactly.
Yeah.
Exactly.
But if it happens, if it works out 60% of the time, it's good.
Yeah.
The sweep, though, I mean, the 68% makes sense. I mean, if you kind of look at the way last year happened, you were already sort of sideways oscillating by mid-December, and it took the markets until mid-February to really make up their mind. So you'd figure whatever holiday lull there is, when you come back in January, there'll be some sort of digestion and figuring out where things are going. Hopefully by February, things are starting to sort of realize some sort of bias. And if that's happening, then at least it's moving and at least there's something there.
All right, give me some currency talk, and then we can wrap it up. I mean, every currency,
right.
Pound, euro, Aussie dollar, all of them have been quite strong. I know maybe the day or two of a little bit of a downward movement at the end of the week there, but they've been extremely strong. I mean, especially like the Australian dollar has been extremely strong. Our dollar, U.S. dollar, a little bit weaker, right? As they go up, the dollar goes a little bit lower. Only the yen can't get out of its own way, and it's a foreign currency. What do you think that does to, or does it have any effect on our odds of, getting more easing in our paper or not?
And Ilya, could I just set the table real quick for you?
Yes, please.
Volatilities came in. Volatility across the board in all the currencies have come in sharply in recent sessions. We were looking at even 30 or 40 or 50 IVRs. Those are now eroded into the 20s. And then this week, Ilya, we have 3 central bank meetings, ECB, BOE, and the Bank of Japan. How are you approaching these markets?
Well, so I think it's pretty clear that in the wake of the Fed, the dollar got shellacked. That was one of the few convincing moves after the Fed. I mean, stocks didn't really go anywhere. They sort of oscillated and waited to digest. Bonds didn't get very far. They kind of cracked lower, but not terribly convincingly. Gold sort of oscillated and waited and broke out later. It wasn't like, oh, the Fed is out. They said the thing. gold is running. No, it took a few days. The few kind of pockets where you saw convincing moves were the major currency crosses. And the euro in particular. I mean, the Aussie had been going higher. They had their own policy announcement. The central bank is now expected to hike rates next year. So that makes sense. There's a yield readjustment there. But the euro really forcibly punched higher. The pound did as well, off of lower levels. And it seems to be linked to this short-term liquidity injecting thing that the Fed is doing. Now, again, they're swearing off that this is stimulus, but also they have something of a point. The SOFR rate, which is the broadest measure of overnight borrowing costs, jumped as high as 36 basis points away from Fed funds in October. And I mean, that's over a full rate cut and has been kind of wacky recently. The Fed obviously stopped quantitative tightening in October to start kind of pulling it back in. And now this, to essentially make sure that overnight liquidity is not expensive and not kind of off kilter. The market didn't think that this really mattered whether it was stimulus or not. They said, oh, well, you're going to inject money to make overnight money cheaper. Okay, so holding dollars overnight is now less lucrative sell. And it looks like there's maybe some legs there because the Fed's going to keep running this thing, it looks like, through April, because Powell kept talking about, oh, the liquidity during tax season might be iffy. Okay, fine. So we now have the Fed basically injecting $40 billion a month in short-term liquidity into the markets for the next 4 months. This probably starts to look like a higher euro, a higher pound, a higher yen, ultimately, once they kind of get out of their own way. I'm long all of those things at this point.
Rates this week.
Yeah, I'm long all of those things at this point. If the BOJ signals that the prime minister is not going to talk him out of further hikes after this week, that'll be bullish. For the ECB, we're not going to get anything hawkish, but we're probably also not going to get anything dovish. No. The ECB at this point is expected to do nothing all year next year, and certainly not at this meeting, which is more than what we expect from the Fed, which is cuts. Bank of England is coming up. They have a similar issue. Inflation's elevated. They're probably not in a hurry to cut. Again, they're not hiking, but that's a better relative spread than what the Fed's doing.
Consensus forecast is for them to cut.
That's right. And their inflation numbers still look iffy.
So
well north of ours.
Among the three, I mean, Tony, you're not really seeing super high IVRs. I think a lot of people, if they're trading the futures market and they're going over to the currency futures, they're doing so because there's a significant volatility advantage there. Maybe it's the spot market to get that exposure, because outside of the euro and the yen, I personally have found that the spot market's better to effectuate trades as opposed to, say, 6C.
Yeah,
I like spot for yen, honestly, because that 6J contract is just way too big. And there's not a good micro future to move around it. I mean, the pound, the Canadian dollar, the Aussie, the euro, real easy with an M6 contract. There's not that for the yen. So I've kind of relegated myself to spot there.
The yen for me is like net gas. I don't care if it's Forex or anything else. I run away from it. There are so many other pairs to trade in FX. We've been doing it. We've been trading a little bit of the opposite side of you. We've been kind of, buying the dollar, selling everything else. You know us. We like that kind of quick reversion to the mean in price on all of these cross pairs.
I was doing that until this most recent reversal. So I was long the dollar. I started buying it, I want to say like July, August, and then just rolling forward because it looked like everybody was talking rate cuts, but the dollar bottomed and stopped going down. I was short it in the first half of the year. It really bailed me out of my stock market ideas. And now I think we might be through a dollar rebound and into another leg of a down move, maybe. But I'm a little bit on the short side just because the price action seems to be pulling that way.
Understood. It's been paying.
Take us home, country road, Tony. To the place where we
Chop.
belong.
I think chop is what I'm going to say. Chop in just about everything. I think you probably have seen the highs in silver. Sorry, guys. That trade seems to be over for me to the upside.
This friendship's over.
Friendship's over. I think you might be able to see a little bit of chop in gold, but some weakness coming in gold too. Had too good of a day on Friday. Just really playing catch up, I think, as Ilya mentioned. But I think you can buy dips in gold. Oil's been not really a very we didn't really even talk about it. It's been steadily going lower. I don't see any real play in there. IB rank is pretty low, and I think the E-mini S&Ps, the Nasdaq, the Russell, and the Dow will close right around where they are. I want to say chop. You know what I mean? I think the expected move for the rest of the year in the E-mini S&Ps, I was looking at it earlier, is about 150 handles. I think it's actually going to be. I think we're going to move outside of that on both spectrums, but close pretty much right about where we are. I mean, I think there's going to be a lot of. I think there's going to be a lot of chop. I think there'll be a lot of starts and stops going into the end of the year. I don't think you see anything crazy going into the end of the year. That's my thought.
You heard it from the boss. Tasty Live's back on air, 2:30 Eastern, 1:30 Central Time, trading from London, of course. We do have Tony, Nick, Vanetta in the morning, 8 a.m. Eastern, 7 a.m. Central, as we kick off the trading week here on Tasty Live. So thanks for coming out here on a Sunday night, guys. Tony, Ilya, good seeing both of you. For Tony Batista and Ilya Spivak, I've been Chris Vecchio. This has been First Call. Have a nice evening, folks, and we'll see you bright and early as the trading week resumes.
Ciao for now.